The following is a presentation of TFNN. The Morning Markets Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Wednesday, July 3rd. We got a shortened day in the markets. So, markets on July 3rd, closing today at 1 p.m. Eastern Time. So, a shortened half day in the markets. Close tomorrow for July 4th. Everyone be careful with those fireworks, all right? I mean, the memes out there, somebody's going to lose some fingers. Unfortunately, tonight, tomorrow, make sure it's not you. Be careful on those fireworks. Have some fun, of course. Enjoy that holiday. And yeah, we got a shortened day today. Gotta love it. We kick things off. Record territory yesterday. Today, a little bit of negative action pairing some of those gains. And boy, quite a rocket ship yesterday, right? S&Ps up to a price tag of $55.70. I know I was out for a few days, taking care of a few things. Feels good to be back. But boy, what did I miss, man? You talk about some action. I don't even want to get into the politics of things. You talk about some action across the board, but just staying with the market. This market relentlessly strong. We had some Fed speak with the chairman yesterday talking about disinflationary forces. We'll see if that persist as we march forward with the Fed. But today we got some data lining up as well as we got private payrolls, 150,000. Let's kick it off with that data before we jump through the charts, because that data leaking through, you could say, to some of the action, whether it's yields, whether it's commodities. We got gold trading higher today. ADP data, so private payrolls for the month of June. Now, we get the non-farm payroll report on Friday. Okay, so half day today, closed on Thursday. We come back on Friday before the weekend. What's the action going to be like on Friday? Very interesting when July 4th falls on a Thursday. Heart goes out, and I'm a little bit jealous to all of those Northeasterners sitting with the bridge traffic, making it down to Cape Cod. They go on Bourne or the Sagamore Bridge. I was always going over the Bourne. Sitting in that traffic. Gotta love it for July 4th. Are you really coming back for that Friday? Well, you might have to when you get a jobs number if you're in the market. Interesting to see what happens. The Hamptons out in New York, similar deal. You get a half day on Wednesday, so you could have taken off almost last night, right? Going to be a slow day in the days today, probably. All right, don't expect any huge fireworks, especially ahead of what we get on Friday. Going to be a slow day in the markets today, but it is interesting getting such an important economic data point on Friday. Non-farm payrolls coming out on Friday, and ahead of that, we get the private payrolls for the month of June, and you only gain 150,000. Yeah, so you got weak numbers in the payrolls, okay? That is largely reflecting an increase in job gains within leisure and hospitality, okay? Job growth has been solid, but not broad-based, is how the chief economist at ADP, Neela Richardson, puts it. Had it not been for the rebound in hiring in leisure and hospitality, June would have been a downbeat month. 150,000 is a little bit of a downbeat as is. Pretty sure that was below expectations. Let's see. Yeah, let's see. No. Okay. Yeah, 160,000 was the expectation. It's a little bit lower. Leisure and hospitality, though, 60,000. 63 to be exact. So by far the biggest number. You take that out, you're only talking about 90,000. When you get into wages, okay, because wages, an important part of this as well. The wage number continuing to decrease, but still some pretty strong numbers when you take a look at it. If you're changing jobs, 7.7% from a year ago. If you're staying in the same job, 4.9% annual increase from a year ago. If you're in the same job, I hope you're getting some raises out there, man, because those are some big numbers, especially when you look at the numbers as they've been rising on a year-over-year basis. Smallest increases, though, since the middle of 2021. It is the middle of 2024, so huge numbers on a 3-year basis, right? When you think about those are the smallest numbers since 2021. You got 2022 in there. You got 2023 in there. We're now at 2024. You're still seeing a 5% increase on a yearly basis. And that's the slowest number that we have seen since 2021. Now, the other number out there, jobless claims Continuing claims increase for a ninth straight week. Still not a startling number. You're talking about 1.86 million is the continuing claims number. So that is the proxy from the number of people receiving benefits on a continuing basis. Okay, we get the initial unemployment claim number, but the continuing claim number is a much more important number when you think about initial jobless claims number is just a healthy part of the churn of an economy, right? People changing jobs, companies reshuffling their workforce to a certain degree. People are out, they're back in. But how many people are out of the workforce on a continual basis searching for a job that they have not yet filled or, gained themselves? 1.86 million is the number. Initial claims was 238,000. 238 is a pretty healthy number. Somewhere around 200, 225 is a healthy churn in this economy, as many would put it. So we fast forward to Friday. The monthly employment on Friday, looking for about 190,000 increase in June payrolls. That would be down from 272 in the month of May. We just saw the private number come in at about 150,000. We saw leisure and hospitality at 63,000. So with that in mind, we jump back to some of the charting action. So S&P's off a bit. NASDAQ 100 off 36 points, quite a surge higher yesterday. Pretty interesting. We'll take a look at NVIDIA, right? It's doing it without some of the NVIDIA action. You had other equities, Amazon making a high, all-time high yesterday at about the 200 price point. You get the Dow, 39,694, positive by 6 points this morning, and the Russell, positive by 3. Bitcoin, down $1,800. It's its own animal sometimes. But yeah, quite a pullback in the last couple of days from 64,000 and change. We hit a price tag of 59,000 in Bitcoin this morning. Crude continuing to rise on, we're pulling back, but we're up by 28 pennies. We got an 83 handle. You take a look at the daily on crude, quite a resurgence from where we were just June 4th at a 72 handle. We're at an 83 handle. We're going to talk to our man Teddy Kegstad at 40 past the hour. We'll talk some Forex. We always talk some crude, some commodities. Always a good conversation. Look forward to talking to Teddy later in the hour. And then you jump to gold. Quite the acceleration in gold this morning, up $29 on gold. Really interesting on gold, man. You take a look. The run really began February 14th, Valentine's Day. You go from about 2,000 up to 2,450, and since then, gold's been in a range, 2,300 to 2,400. Boy, we've had some big moves. The biggest of them all was probably out there on June 7th, almost a month ago, where gold traded down more than $100 in a single day. But all it did is hit that 2,300 price point. You also had a pullback June 21st to June 26th. Similar action. You traded from 2382 down to a low of 2304. But since then, we're surging higher yet again. Gold up $28. Now, where is that coming from? You jump over to yields and the dollar. We're going to get there. All right, we got a little bit of higher price, lower yield coming at you. Okay, now where is that coming from? Well, that's coming from the fact that we got some weakness out here. And the data, along with Chairman Powell's words yesterday, lining up for potentially some cuts. At least one of them coming down the line at some point. And there's your chart of the 10-year. Okay, we got to pop all the way up to a price point on June 14th of 111, and we're at 109.21 right now. You got a 10-year yield of 4.4% this morning, and we jump over to the dollar index, DXY. There's your weakness. That's always going to help commodities, and there's the dive. From yesterday, early at 106, we're at 105.42 this morning. You got gold trading higher. Still pretty remarkable strength with a 105.42 handle. Nonetheless, we got a lot to talk about. Stay tuned, folks. We'll come back. We'll take a look at NVIDIA. We'll take a look at Tesla, some other equities. Stay tuned. Back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This portion of the morning market kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. Sorry we missed the audio in the den for that whole first segment, man. Jumping around all those markets, talking about the private payrolls this morning, talking about that we get, of course, the non-farm payrolls coming up on Friday. As I mentioned, didn't quite hear it in the den. Apologize for that, but we're back in there right now. But yeah, pretty interesting. Leisure and hospitality adding 63,000 jobs in that private payrolls that we just got out there of the 150. So that was a huge number, man. You take leisure and hospitality out of there, you're adding, what, less than 90,000? The number that we're looking for private payrolls coming down the line on Friday, that number is going to be looking for about 190,000, down from 272 is the number that that they had in May. And yeah, what do we got coming off of that? You got some dollar weakness this morning. That's putting a bid in the gold contract. Dollar continuing to drop. Look at that drop, man. That is a drop for sure. 105.39 right now. And it is interesting when you take a look even. There's your 10-year. Not a dramatic move when you talk about the move in the dollar, but what do you got? You got a little bit of economic weakness in terms of private payrolls, only up 150,000 for the month of June, on the heels of Chairman Powell's words yesterday, where he's talking about disinflationary forces. And it is interesting when you look at those wage numbers, right? And I talked about this, but for those in the den, kicking it off again, you look at those wage numbers, okay? They're still pretty decent numbers overall. Now, they're the lowest number since 2021, middle of the year. But for those who change jobs, again, this is from the ADP data out this morning for private payrolls. If you change jobs, up 7.7% from a year ago. If you stay in the same job, okay, you're up 4.9% from a year ago. Slowest numbers, smallest numbers since the middle of 2021. Now, what's interesting, though, is think about the compounding nature of these, okay? And listen, people deserve this. They probably deserve more when you talk about the compound nature of inflation we're dealing with here since the middle of 2021. But you're talking about 5% for staying in the same job year over year from 23 to 24. But you're talking about the smallest numbers since middle of 2021. But what are you talking about? Well, you go 2021, 22, 23, 24. That's 4 years. If you're talking about 5% over 4 years, that's a 25% pay increase almost when you compound some of those numbers just for staying in the same job. So, people are looking at that grocery paycheck, grocery bill, easily, right? 25% higher. Say easily over a 3 or 4 year basis. Right? But it is interesting when you look at these numbers where you're still dealing with pay increases of 5% year over year, which are the slowest numbers since 2021. But you got to compound those numbers, man. And that's, guess what, though? Those are still some big numbers, man. Now, the Fed can make the case that we're at 150,000 jobs on a private payrolls basis. Okay, we get the non-farm payroll numbers on Friday. And the Fed is currently at 5.25 to 5.5%. You got the 10-year at 4.4% right now. We'll see where that goes from there. But it is interesting that maybe they have a little bit of room to go to the downside. Probably going to be higher for longer, except for the fact that if we really come into some economic weakness. I don't think that's going to happen right now, but it always could. That's the case for real dramatic cuts in this economy. Because this economy is on fire right now. The Fed does not need to go back to 2 to 3% right now. That's not where we are, and we'll see where we go from there. All right. Now, want to talk about NVIDIA. Oh, come on. What is going on here? My session expired. Let me turn off the screen for 1 second. How are they doing that to me? How did it expire right now? Let me get back in there, enter my password. How's Thinkorswim doing that to me right now? Brutal. Initializing updates. I was just looking at it in the first segment of the program. My session expires at 9:15. They got to get their act together, man. I know, right? I got my pirate theme rocking, baby. I am ready for Gasparilla come next January in Tampa. And what did I miss, man? I missed a lot of action, right? I was out for a few days. Let me log back in. I was out for a few days. I'm coming back, Al. You're going to get my screen in one moment here. And boy, I missed some action. When you talk about it, man, I missed the debate. Do I even need to go into that one? Why not? I'll go into it. I think Biden's going to be out, man. I think it was that bad. I think he's going to be out, which is remarkable. We live in interesting times, as they say, man. And he should be out. That was just abysmal, no matter how you feel about politics, man. Listen. There's no sugarcoating what you saw with Dutura. I think it was that bad. I was telling my friend, I think he's going to be out. And we are in for a wild election season like we've never seen. Many economies have elections that run for 2-3 months, right? So we got 4 months until election season. I think it's going to happen. And that's just going to make things even more wild when you think about it. All right. Give me one more second here. I'm going to turn it off one more time, Al. One more. Okay, and I'm coming back for the charts. And there we go. We're back. And what else I missed? Steven Stamkos, man, gone from Tampa. That's a bummer. He's in Nashville, I think it is now. I was thinking of that because of Tampa, good old Tampa. Yeah, I got my pirate theme rocking, man. And I'm doing well. What happens, for those who don't know, had a little brain surgery. Almost going on 3 months. Pretty remarkable how the body can repair itself, man. I'm not even 3 months out. It was April 8th. 3 months would be July 8th is where we're at. And I just got a lot of numbness still on my head. And so that's going to take some time for my eye to focus. My right eye is great. If I cover my left eye, I can see, but I get some double vision. So when I'm sitting here with 2 big screens, lots of numbers, it's just a lot easier for me to cover one eye so that I'm not seeing double vision. When I'm driving, I cover one eye as well so I can see it. But energy level-wise, I'm doing pretty well. I'm doing great. I'm doing fantastic, man. So I appreciate all the support. Feels good to be back. Just had a few things to take care of this week, but I'm doing well, without a doubt. All right, let's jump to NVIDIA shares. NVIDIA. Now, we talked about this one, man. This A to B, C to D. I think we're going to chop around here for a little while. And what I just wanted to look at, so that was the A to B that started at the beginning of the year. from about $50 up to 100. You pull back to about a 382. You complete that A to B, C to D at about 125.69, and look where we're chopping around at, right at that level. That might be a little bit of an area of resistance that we bump up against. And what I did want to focus on a daily basis, right? Look at that bar from June 6th, 665 million shares. We got up to 125.59, literally within 10 pennies of completing that A to B, C to D. Since then, look at the drop-off in volume as you trickled higher. And then where do we get volume? Boom, on the way down. 517, 655, and 476. And then what do we get? We're just chopping around at about the 125, right where we were. So look for that area to be a little bit of resistance potentially on NVIDIA shares. Don't imagine it to drop out of the woods in terms of taking a dramatic turn to the downside, okay? But it is remarkable when you look at that A to B, C to D, it completes perfectly. And that is a 50-point A to B, C to D leg. And it's remarkable that that's a $50 A to B, C to D when you started at $47 to kick off the year. That is quite A to B, C to D, man. But NVIDIA pulls back, and the other equities are carrying it, man. Amazon, talk about a run for Amazon. Amazon going to open right near all-time highs. Stay tuned, folks. We're coming back for the opening bell. Don't go away.
The consistency you're looking for is closer than you think. One or two adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the second and fourth Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry Pesavento on Friday, June 14th and Friday, June 28th this month for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryJune24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open, and yeah, taking a look at Amazon. Now, I do have Amazon in a retirement account, full disclosure, man, but boy, it's been quite a run, right? I talked about whether you got NVIDIA out there going from $50 up to $125. Even a company like Amazon goes from $145 to $199. You could say you had the pullback there, and let's just see where we are in terms of on a percentage basis. 50% pullback you got on that run. So if you do Amazon, you got 145 up to 90. So you're talking about a $45 A to B, C to D leg. You pull back to about the 50% retracement, come out with their earnings in April, and that would put you at about 210 or something like that. You reached a low back there of 166. So if you're talking about $45, you're talking about 211 or something like that would be the completion of their A to B, C to D, but quite a rocket ship for Amazon shares. They're going to be getting into that shine business, which is when you saw that acceleration pop from 186 to 200 over just a couple of days. You're pumping up against that level yet again. For Amazon shares higher, you jump over to some of the other equities. Microsoft on quite a tear, record territory, positive yet again this morning. So it's interesting when you look at, you've had a pullback in NVIDIA, but no pullback in the other equities, man. Google pushing recent highs as well, 186.24. Boy, Apple, right? Up to 220. This morning already at 219. You were trading at 164 on April 22nd. 3 months, you've traded up to 220 for Apple shares. Just a rocket ship across the board. We check back in on NVIDIA shares. NVIDIA basically flat this morning, 120.260. All right, we jump over to Tesla shares. Tesla up another 2.4% right now. Tesla's probably coming back up to test this high at 264. Pretty remarkable that it's doing it, especially on the heels of the numbers that they had yesterday. You jump over to Tesla shares. Tesla rises again in the pre-market trading after better than expected deliveries. Now, expectations are everything. They're better than expected, but they're actually declining numbers, which is remarkable in that context, right? So they delivered 444,000 vehicles in the second quarter. They were looking for maybe 439. They produced 410. The one that just blows my mind, okay, is the pay package still. You might as well consider Tesla a pre-revenue company for the multiples that it's trading at and the type of pay that Elon is getting. They delivered 444,000 vehicles in the quarter. If you annualize that number, you're talking about 1.77 million vehicles, something like that. 1.776, I think it comes to exactly. You take Elon's pay package of $55 billion. Now that's over what, 5 years or something like that. But just take the $55 billion that he's getting rewarded, right? You take the 1.76, and I get Tesla's more than these car companies, the car deliveries. But it's like a pre-revenue company if you're dismissing the car deliveries at all and saying it's about humanoid robots, it's about energy storage and sales, and it may be, okay? But if you take 1.76 million vehicles, 1.77, something like that, you take the $55 billion that Elon's getting, he is getting paid $31,000 himself to be CEO per a car sold for the entire year that they sell. It's I don't know, they're not even making any money if they're paying the CEO $31,000 per vehicle that they sell for the entire year. Doesn't make sense to me. If you're looking at it like a pre-revenue company on the prospects of the future, then go with it, and you might be right. There have been a lot of bears that have been wrong recently, as this thing has been stratospheric in its run from 138 up to 237. They got robo-taxi announcements coming when? Was it August or October or something like that? God bless anybody who's jumping into a Tesla for a robo-taxi. Man, with the videos that I've seen online, I'm not going to be first in line to do that. But be careful in this equity. Be careful. Doesn't mean, I'm not short it right now. We tried to short earlier, lost a little bit of money. Put your stops in place. This thing has its own animal spirits, as they like to say. That's for sure. But again, getting stratospheric, you jump over to the Analyze tab. We're up by another 2.7%. Tesla now approaching a market cap of $756 billion out there for Tesla shares. Pretty remarkable. All right, what else we got going on? Let's talk a little bit of Hindenburg, man. This story out there, interesting. Where are we? Let's find it. There it is. So that short report that was, a year ago now at least? I mean, time flies. When was that? Do you remember the Adani Group? When it just collapsed to $153 billion is how much market value that company lost. Do you know how much Hindenburg made for that short report? $4 million. That's all they made. Remarkable. Now, they made $4 million, and they made that $4 million basically as making a deal with the hedge fund that they got about 30%, 25% of the profits that hedge fund made. The cool part about that deal, I guess, is that they have no risk, right? They shared this report with a hedge fund. Okay. Let me get it. Yeah, pretty remarkable. And where is the hedge fund? All right, I'll pull it. Is it Kingdon? I think it is. They shared the short report with the hedge fund months ahead of time. The hedge fund built the short position. They originally were going to get 30% of the profits. It went down to 25% of the profits after the cost of the trades, and they made $4 million, and the company lost $153 billion at one point. It's still $30 billion below the market cap it was at the time. Pretty remarkable. I think this is the one that actually had it. Yeah, Kingdon was the hedge fund. Pretty remarkable. They only made $4 million when you put together that type of a trade. It decimates $153 billion in market cap, and they only make $4 million for that type of research. Pretty remarkable. All right, we jump to yields and mortgages. How about mortgages? They actually go back up. What's going to happen to that housing market, man, if we actually get some cuts? It's going to be interesting. But guess what? We're back above 7% right now. Contract rates on 30-year fixed mortgages climbed to 7.03%. Mortgage applications falling 3.3% last week, but those numbers back up. Look where we've been chopping for a while, man. You were as high as 8. We've been chopping around that 7 number for the better part of, 6-7 months right now. You were as low as 6.8. We've been sitting there since basically February at 7%. And that number, applications falling to buy a home 3.3%. Now, it is interesting, this one up at the same time. Shouldn't be surprising when you continue to have home equity prices rise. At the same time that you have rates stuck at 7%, what's going to happen? The ability to buy a home is going to go up. Home affordability in the U.S. sinks to the lowest point since 2007. Now, here's what I'll say. That can change dramatically if we get a cut in rates. Okay? Yes, you could see the price of housing rise. But when you think of what it could do to a monthly payment, if it drops to 6 or 5%, it could have a dramatic impact because the affordable nature of housing is just non-existent right now. Mortgage payments, property insurance, and taxes consuming about 35.1% of the average wage in the second quarter, the highest share since 2007, and that's up from 32.1% a year earlier. So what they're looking at is they're looking at average wages. So even as wages go up 5%, right? We just got the ADP number. Wages up 4.9% in the same job. Even with that happening, housing prices going up, monthly payments staying the same. Insurance, yeah, it's happening, man. Pretty remarkable when you look at that. 35.1% is what that would consist of versus your wages. Stay tuned, folks. We're coming back with our man Teddy Kegstadt. We'll talk some Forex. We'll talk some crude. We'll talk some yield. Stay tuned.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, He has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Open Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&Ps right now flat. Remember, we got a half day closing at 1 p.m. Eastern time today, but we got some action on TFNN until then. As we always do at 40 past the hour on Wednesdays, we're going to jump over and talk to our man Teddy Kegstad. Folks, if you have some time available, we got a half day today, close tomorrow. Markets open on Friday, but maybe you're taking a long weekend. You got some time, whether Teddy's outstanding Forex report, you can check that out under the newsletter tab. You can sign up for $97, comes with a 30-day money-back guarantee. And don't forget, he's got a couple great webinars out there for $97, capitalizing on time with calendar stock option spreads with Teddy Kegstad, and Japanese candlestick pattern stock and option strategies with Teddy. You gain access to the webinar. You get the archive. You can watch it as many times as you like. Maybe you get some time over this long holiday weekend. Teddy Kegstad, good morning.
Good morning, Tommy.
So we got some movement in the dollar this morning, man. We got some commodities. We got some jobs numbers this morning. Where do you want to kick things off, Teddy?
Well, I think we should start with crude. How about that?
I like it. Let's do it.
Okay, so, as you know, yesterday we spiked high in the crude, and we came just shy of the upper part of their critical resistance band from the Tiger Forex report. I like the resistance area where we're at right now. I would be careful if we take out the high from yesterday. That is not a good sign. I think that the high from yesterday, if we come and maybe buffer around that area and fall off of that, that would be a good thing. And pretty much confirm that we're in a range trade for crude from about 85 down to $75. If we get above 85 and close above it, that's not a good thing. That would be very, very bullish. So we'll see how that goes. Right now, I like that it's kind of toppy, if you will. I will not try and call a top or a bottom. I think it's a good resistance area for it to come back and at least retrace in the short run, for a profit-taking move at the very least. If it doesn't, I would say that would probably signal there's an acceleration of the trend. And when I mean acceleration of the trend, it's a confirmation of a medium and longer term boost, which fundamentally I don't think is there. But if you hit those levels, that's probably what that means.
Yeah, I appreciate the take. And it is remarkable, even on a percentage basis, we're not even, I was checking out the charts as you were talking about it. June 4th on my chart, I got a price tag of 72, the handle, and we just hit 84. Right. So you're talking about a $12 run when it was trading at $72 and change, man. That's like a 15% increase in a month in the price of crude. Remarkable. And then I put it on a weekly, Teddy, as you were talking about, just looking at some of those price levels. And, we got so used to some of those huge swings, whether it was the Russia invasion of Ukraine up to 130 and change. You had COVID doing bonkers stuff, of course, going to negative prices. But you go all the way back to October of 2022. You're talking about almost 2 years, and we're between like 70 and 90. We got a few spikes, something like that. Right. But it is interesting that we're kind of in a range of $20, which you look at the prior years before that, we had, just craziness on either side. But we're kind of in a little bit of a range. I appreciate the take. And yeah, I'm looking at, $85. We were up there earlier in the year, pushing some of those levels, but it is interesting. And we've seen the prices at the pump. And you talked about the fundamentals. It is interesting, the fundamental nature of it. You talked about, July 4th of all weekends were coming in. A huge driving weekend for the people all across the country, man. And you talked about the fundamentals, and then we look at the technicals. How do you square some of those actions in your own head? And you talked about it right then, because the fundamentals might not be lining up, but boy, the technicals look like we're coming into that area. How do you approach something like that as a trader, really, when some of those things are a little bit divergent? I know it's a broad-based question, but you just touched on it.
No, it's actually a very great question, Tommy, and it's really simplistic. The market is made up of many different participants. You have your speculators, you have your hedgers, and what have you. We're not in a hedging environment right now. It's become a very speculative. Speculative trading becomes very volatile and spiky. It's when you start to, like you were just saying, there's a divergence between fundamentals and technicals. When you come into that environment, and especially when you're talking about a market like crude or any type of commodity, I'm a Forex guy. The nice thing about FX is you're liquid, basically almost 7 days a week, except for Friday afternoon into Sunday afternoon, for 48 hours. That's the only time you're closed, So there's a dynamic with commodities, because when you have expirations of futures, expirations of options, and especially in this kind of environment where you have technicals and fundamentals diverging, it gives a lot of opportunities for traders and bigger money interests, So that can cause a lot of swings that you're not going to normally have in a when the market is liquid and normal, even if it's chaotic because of news, it's stable. You may have big rallies, you may have big breaks, but it still has enough volume at every price level to absorb whatever dynamic you have going on during the day. Now we're coming into a period where you're going to have vacuum pockets, where you're literally going to have concentrations of volume at such a divergence of levels that you're going to cause these vacuum spikes. They're going to run the deck, and all your weak shorts and longs, depending on the move, are probably going to get squeezed out. So I would be very careful. Right now you can, like you said, since the beginning of June, I mean, we ended the second quarter, we're halfway through the summer, and we've been rallying crude for a month. So the question is, at the very least, is there going to be a corrective pullback, a profit-taking move, or is this trend really that strong? And then it's a matter of, once, like you said, technicals and fundamentals are diverging. What's driving this? It's speculative action is driving this market right now, and that's kind of scary when you get to that point, because you have to, if like right now, if you're long, I'd be very cautious about your stops. I wouldn't raise them too tight, but I would definitely be cautious with them, as far as having your rational expectations to the upside. If you're not in the trade right now, I'd be very careful on a daily basis. Like we spiked high yesterday in crude. We're coming back a little bit today, going into a holiday market. You got to remember, it's a holiday market week. We're going to be closed. We're going to come back Friday. Like, let's say that today, we're going to close soon. Crude's probably not going to have much action after another hour from now. Let's just be real. We're closing down, blah, blah, blah. Let's say Friday the market sinks just a little bit, okay? I could see then if Monday we open up and see a big rally, and especially if we come close to the high of, yesterday, you're probably going to see crude go up to $87 to $90 next week, So, and that's not because of fundamentals. It's not because of anything in the news. It's not because of anything like that. It's purely speculative. irrational exuberance, I guess, is what you want to say about it. It's the market right now is just pumping up. The bid is on crude right now. There's no reason to sell except for profit taking, and even that's really skittish. So that's the kind of market we're looking at right now. I have to say, the currencies, there's action in crude, as far as the dollar index and currencies and interest rates. We know that they're in a range trade. Crude has been in a range trade, but maybe we're pushing the bounds for a breakout to the upside.
That was great information, man. A great lesson as a trader. And if you got a few minutes, can we come back and talk maybe some
Absolutely.
of those? I want to take a look at the yen if we can, and maybe the dollar index as well. Stay tuned, folks.
Absolutely.
We'll be right back. Cool.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com. Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. S&P's positive by 1. We're talking to our man, Teddy Kegstad. So, Teddy, maybe if we can kick it off with the dollar, just because, we got some private payroll numbers today. We had Chairman Powell out there yesterday, so we got the 10-year sitting at 4.4% right now. The idea being in the market, at least, that maybe we are having a little bit of weakening. Chairman Powell used, I think, the word disinflationary forces. Maybe we get a cut. And you got the dollar a little bit weak at 105.34. That's putting a bid in gold up like $35 this morning. What do you think about the action in the dollar index right now, 105.34?
You know what? We actually took today is the day where we're actually sliding pretty hard in the dollar index. It's holiday markets. Once again, I'd be very careful about what kind of market action you have over today, on a shortened time frame, and then Friday and in front of a weekend. So, I mean, yields right now, we had a spike low in yields 2 days ago. Now they're coming back. I think that's one of the reasons why you're seeing the dollar index fall apart today. It's also thin volume. I think that's another reason on why that's happening. When it comes to the U.S. dollar yen, I mean, because that's talk about divergence. Like you got the dollar index is falling down, but the U.S. dollar yen is railing. Why is that happening? Yeah. Well, I think it's probably because oil's up and yields are falling down. So and then when you have that and with between the commodity aspect, that's giving strength to that and the yields, but it's acting the opposite with all the other currency crosses.
Yeah.
So and that's why the dollar index
did.
Yeah.
Yeah.
So, And right now we're laying on, from the Tiger Forex report, where we had the critical bearish retracement band, which was for the correction from the high that we had from last week. We're laying on the bottom of that band. I like that as far as support. Can we get below it? Absolutely. Can we close below it and be around there on Friday? Yeah, but I'd be careful because you're looking at a corrective profit-taking move. There's no fundamental reason to say that the dollar is going to crash right now. I mean, even just because you're talking about a 2-day bounce in yields, that doesn't mean that the yields are going to start to go down. As far as this quarter cut, I think that there might juice the election to help Biden. That's where this is coming from. They're giving a precursor to maybe in September cut the rate a quarter point, and it's just to address the election. Outside of that, it goes against their narrative.
We'll see if they're going to help him. We see if he's even going to be around by November on that ticket. We'll see. Teddy, thanks so much, man. I appreciate it. We'll